Welcome back then to this special broadcast of SA Today right here on SABC News. Of course, the Monetary Policy Committee's decision to keep interest rates on hold this afternoon is what we're discussing. It leaves the repo rate at 3.5% and the prime lending rate then at 7%. It wasn't a unanimous decision. Johan Els from Old Mutual, Tendani Manchimuli from Liberty also joining us as we unpack this decision as well. Folks, it wasn't a unanimous decision. Johan, I'll come to you. Does this mean, though, that we won't get any more cuts in future if the data hopefully stays in the same manner as they've predicted it to do so? Their quarterly model, however, or their employment method that they use to kind of project these things says, though, that there's no more interest rate cut in November.
Yes, absolutely. But the model can change down the line, depending on how the data flow comes out when they run the model again. I think we're probably close to the end of the cutting cycle. I think there is still a chance, though small, that they could cut again, depending on how inflation unfolds the second half of this year and what the growth profile looks like. There is still a probability of another cut. But I think we're close to the end of the cycle in any case. I think thus it's probably more important to look forward to when we think that will start again. But, you know, the policy change that the Federal Reserve Board in the US has enacted over the last few weeks, much lower rates for much longer. They said they'll keep rates flat deep into 2020. That keeps pressure off the Reserve Bank as well. That probably means our own interest rates, whether it's cut another 25 basis points or not, we're at a low phase, and this probably will stay with us for an extended period of time as well, because there's no international pressure on lifting rates in South Africa.
Yeah, certainly true. Tendani, would you agree with that assessment?
Yeah, I think we are almost at the end of the cutting cycle, and I think the governor did indicate that that's what the model says. However, for me, it's important while he did mention as well the input from the Bank of England and the US Fed is just one of the many data points that they consider when they take a decision on whether to cut, let interest rates stay the same or increase. That's just one of the data points. Developments here at home, I think, are going to play a more pivotal role in terms of whether we see a tightening of monetary policy going forward. Where the economy is right now and where consumer confidence is and where the chances of people getting employment and discretionary spend coming up, I don't think we're going to see anything from the demand side coming to push inflation higher. I also hope that in terms of the trajectory of the virus, we're not going to see any constraints in terms of supply going forward. So coming from here, I don't think we're going to see any changes in inflation. There are no pressures coming domestically. And we know that going forward as well, oil prices are not going to, the forecast from the bank is not indicating any undue upward move in terms of oil prices. So that is not going to pose a pressure on inflation. The danger for me lies in terms of electricity. It's a concern even in the current inflation print. When you look internally, that's one of the items that we should be concerned about. I think, however, that the other items are going to mute that. So no chance of inflation being a factor in the MPC saying, we have to raise interest rates. So I think for now, they're going to remain low for the longer term.
Yeah. Overall, Tendani, are you worried about the growth picture? I mean, a contraction of 7.3% was the initial estimation in July. Now it's sitting at 8.2% in terms of that contraction. It's a big adjustment to make.
I even think that the annual data is a bit flattering. We might see something between 8 and 10%, closer to 10% in terms of contraction. Sure. He talks about the fact that the second and third quarter, we're going to see a bounce in GDP. I agree. the easing of of restrictions will certainly boost economic activity. However, Arabile, coming from a contraction of 51%, most of the boost is going to be a statistical adjustment. I just don't think that the economy is anywhere near where we wanted it to be. Most of the third and fourth quarter numbers are not going to be a real boost in the sense that the economy is robust. Part of it will be a statistical adjustment. So I'm really worried. I do think that the new revised number might also still be a bit flattering to what we might actually see.
Sure. Johan, would you agree with that? I mean, it's a high number already. I mean, we already saw the OECD also do pretty much the same. They estimate that South Africa's annual growth will be around, annual contraction, should I say, 11.5% for this year. Could it get to that figure, Johan?
It is absolutely not impossible. My forecast isn't that weak, but it's not impossible. There is so much uncertainty around virus, lockdowns, second phases, that is certainly a risk. And that is the reason why the Reserve Bank should have taken more account of the risk and the uncertainty in this economy. As I said earlier, these are truly extraordinary circumstances that we haven't seen in our lifetimes and that we probably not will see pretty soon. But it's therefore also important that, once we get through this crisis, that we focus on the medium-term growth going forward. Annual average GDP growth in South Africa was only 0.8% in the 5 years to 2019. So even before this crisis, we had almost no growth. And thus, these policy reform that we were promised to come by the October MTBPS, that's now crucial. And I realize the president is talking about that. You got an agreement at NEDLAC. The cabinet is deciding about that next week. But these policy reforms are now crucial because if we get through this crisis, where are we headed in the medium term? Still no growth, or are we heading to somewhat a better path? We need to fix policy so we can improve confidence, because confidence could be the big driver in terms of medium-term growth.
Johan, I'd be remiss if I didn't ask then. Of course, yesterday there was also the expectation that maybe, just maybe, President Cyril Ramaphosa would announce some sort of economic future plan for South Africa, economic recovery plan, beyond the one that he obviously announced earlier on this year with regards to the 500 billion rand stimulus package. Are you, one, disappointed at all that that did not come through? But two, what is it that you'd probably hope for when it comes to an economic recovery plan that he discussed with NEDLAC as well?
Yes, we've had plans, Treasury's plan last year, the ANC plan, the Business for SA plan. But you know what? All of them are based on the NDP, the National Development Plan, which is actual ANC policy. It should just be implemented. And there's a whole bunch of other on the ANC government's list. President Ramaphosa and Minister of Finance have said the things that they want to do: fix their state-owned enterprises, transform Eskom, get some extra energy online. These things have been slow, far too slow. Just implement the plans that's on the table, and that will help boost confidence. So, it took the energy regulator more than 6 months to approve the plans that the minister has passed earlier this year in terms of getting more private energy online in this load shedding crisis. So we're too slow with the stuff that we've got plans to implement these. So I know these things are coming. We should enhance these policy measures as well. We should go for radical restructuring of the state-owned enterprises. We should privatize them, even if the government doesn't get any money from it. But the fact that the government, if it's doing this, would be willing to get private management in, that'll be a huge confidence booster, for instance. More private participation in the economy is hugely important. The infrastructure plan that government has got, that is fantastic. And I see there's some improvement in terms of approving projects far quicker. We should do all these things, implement quicker.
Yeah. Very finally, Tendani, your quick wins perhaps that government has at its advantage at this point.
The first win for me was the fact that the plan that's going to be approved by cabinet was from both Labour, business, and government. And for me, the fact that Labour backs this up tells me that they can see the severity of the situation that the economy is in. So that is a win for me. I don't know if really we should expect anything different from cabinet, because that was presented by government. So if that happens and we can see things starting to roll out quickly, that would be a big win for me. The fact that they're talking about constant monitoring of execution is something that I feel that is different from the previous plans, which were beautiful, but don't help the economy if they're not executed. I'd like to see, though, what the plan as far as Eskom is concerned is going to be, because Arabile, other than COVID, the continued electricity constraints and load shedding is not helping the economy. I think we are focused on the impact on COVID. We are forgetting that even without that, if we're just having the load shedding that we've been having for the past few weeks, it would still dent the economy so badly. So I think Eskom
still have our own.
Yes.
Yeah. No, you're 100% right. We still have our own goals that we keep scoring at this point in time and aren't helping ourselves at all. Tendani, really appreciate it. Thank you so much for the time this afternoon. Tendani Manchimuli is economist there at Liberty, joining us this afternoon on this MPC discussion. Johan Els also joined us, economist then at Old Mutual, joining us as well in this MPC post discussion then as well. So the South African Reserve Bank deciding to keep interest rates unchanged, 3.5% for the repo rate, 7% then for the prime lending rate. Inflation to still remain within the target band and even below the midpoint for the time being. Growth, well, none of that. We're getting a contraction of around 8% or more is what the South African Reserve Bank is saying right now. My colleague Palesa Chibudi does have your news headlines at the top of the hour. Do stay tuned to SA Today. I'll be back with more news then for you tomorrow. From me though, that's where the buck stops.